Well, it's easy to beat the market during earnings season. At least that's what a recent report from Goldman's options team seems to suggest. Now, they say that buying bullish call options on stocks that have underperformed ahead of earnings has returned 30% this quarter and 18% in the average year. I'm Morgan Brennan, and here to discuss is the Trading Nation team. We've got Bill Baruch from iiTrader and Jake Weinig of Malachite Capital. Jake, let's start with you. How does this work?
Yeah, first of all, it's a pleasure to be here. Thanks so much for having me. I read this report from John this morning, really interesting report, and I think he's right on the ball here. We've been in a market that where contrarian views have really paid off for a lot of traders. A lot of stocks that have had big short interest have surprised on earnings, and buying cheap call options have really outperformed. One of the things John talks about is how single stock vol on a lot of these underperformers has been relatively low, along with index volatility and a lot of other ways of buying optionality. But because there's so much short interest in these stocks, and we've seen some outperformance in the earnings, traders can have really nice returns on investment buying these very cheap calls.
And Bill, digging into this a little bit further, would you say that there are examples in earnings season? I know we're still sort of in early innings here, but some examples in earnings season where this could have paid off?
I think strategically it can pay off. One of the most important things I do think is you get a stock that is underperforming because of nervous longs. They're getting selling ahead of this earnings report, and then you get a frenzy of buying that comes in after a strong report. Now, the key to this as well is analyst earnings, I believe, have been on the low end, which allows this strategy to accelerate and to be profitable. But as well, the supply-demand technicals, which I like to look at, if the sellers have already came in, a lot of the selling has already occurred, then how much selling can really occur if the earnings is positive from there. And really what we would see is a short covering rally or fresh buying frenzy that does come back in.
Yeah, and certainly you can make the argument just today with some of the defense stocks that have reported better than expected earnings, and it's actually lifting the overall industrials and the broader S&P earnings picture so far this earnings season. Guys, thanks for joining us, Bill Baruch and Jake Weinig. I'm Morgan Brennan. This is Trading Nation.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.